Hi guys, welcome back. Day 30 of my challenge to take a small account to a sizable amount. 26th of February, guys. So 11:17 in the evening, GMT time, um, and a couple of trades today. Just show you. Oh, sorry, yeah, it's just a hamster. Yeah, a couple of trades today. Drop down to a 5 minute, a little bit easier. Yeah, there we go. Very short scalp, very quick one. The first of the portion was taken off around about 24 to 25 pips, and then the second portion was taken off around about 35 pips. And context of the trade was, I believe, that we're coming down to 122.04, 122.05 basically, at some point this week. At least that's my target. It's about 100 pips away at current price levels. So my bearish, my bias is bearish on Euro USD, which I said in the look ahead video, which I did yesterday, and that bias hasn't changed. I still think that the dollar's going to have a punch up through this 90.50, which should push Euro USD to 122.05 at least, and because of that bearish bias, the initial run up today on the 4 hour, you can see we had this really nice push up. We've got a high here, just tags it ever so slightly, nice strong move lower, and then as it started to retrace this 4 hour bar, I took a short on a lower time frame, which would have been the hourly at the time, and there we go. Nice simple little trade. You can see that the target was just below today's low, tagged that nicely, and then we've had a little bit of pushback and finished just shy of the middle of the range today, and I'm expecting pretty much the same thing again, guys. Tomorrow, a little bit of a pop higher, hopefully a little bit of a pop higher, and then just to carry on, move lower. This is the next target down here, which is going to be at least 122.60 to 122.50. It's about 50 pips away. And remember, we're just looking for short trades, nothing over the top. And I've decided to slow it down a lot, to be fair, on this challenge account. I'm not going to overdo it. I was getting a bit zealous, we'll say. So I'm just going to slowly start chipping away again. You can see the first trade that I took off was at 3.51, £3.51 for the first portion, which was a 10. I opened basically a 0.3 lot on this account, so I took that off at 3.51, and then a £4.80, which was the last portion that basically hit. Sorry, it's the other way around. The £4.80 was the first that came off at 0.20, and then a 0.10 was the one that tagged down here on the last portion. And that's it. That's pretty much the trade, guys. I'm not going to overdo it. I will go and get some rest. I'm pretty tired, as I'm sure you can hear my voice. And I'll be fresh at it tomorrow. There is some news coming out tomorrow for the Euro, 8 o'clock, 9 o'clock in the morning, 10 o'clock. So, and this is GMT time, so I'm not expecting Euro to just be one directional tomorrow. I'm probably going to wait for Euro to do its thing tomorrow and maybe look for a trade on something else. Excuse me, look for a trade on something else, and wait for Euro to just break today's low. If Euro can continue going lower, break today's low, and we get a retest, then I'm more than happy to take a trade here, because it's still the same shit to me. Whether I take the trade, on a run higher to this low or this low, or whether I take the trade if it comes down and then retest here and lower, I'm still getting my 20-30 pips. I don't care which one of the two it happens. If it rips to the upside, then that tells me a bunch of stuff as well, and I'll take the trade higher. It doesn't really matter. The most important thing is to wait for these scenarios to unfold, you know, and you take it from there. You know, a lot of people they just want to be in all the time, you know, and it's not enough to just say, yeah, you know what, it went up, it came down, yeah, it's coming down here, fuck it, I'm going to go short. You can't, I mean, you can do that, you're more than welcome to, but you're not going to stay in the business very long, basically. So, sorry guys, my allergies, oh my god. You're not going to stay in the business very long, you know, so my advice would be just chill, man. Just chill out, let things unfold, you know, take your time, and be very specific about what you want to see. I put a tweet out earlier this afternoon, and I was saying, you know, just adding a little bit of scratch onto the account, you know, with a setup that when I see it, I just see it straight away. I don't even have to double look. If it's there, I see it. And it's my go-to trade. It's the one that I absolutely love. It's the one that really resonates with me personally. I see it every time, you know, and I'm about 80 to 90% accurate with that particular trade. But on the higher time frames, the 4 hour and the daily, they take a little bit of time to form. So what I like to do is I'll have my higher time frame daily and 4 hour levels, and then when price reaches those levels, I'm looking for a reaction. Then I'm looking for a specific setup to form for the entry. You know, so it doesn't necessarily mean it has to form on the the 4 hour or the hourly, or the daily. Sorry, the 4 hour or the daily, because if that particular setup that I'm talking about was to form on a 4 hour or a daily, then you're talking like the movement is obviously a lot more exaggerated, and I'm not looking for that. I'm just looking for strong levels to trade or key off of, to keep like strong levels to key off of. And the higher time frame levels are much more stable than the lower time frame levels. And they have a lot more weight, and a lot more power, so to speak, in terms of technical analysis and charting. So for me personally, like I said, I use the higher time frame levels, and then when price reaches those levels on the higher time frames, then I drop down and then I'm looking for a specific pattern for my entry. And it's not a pattern as in when the pattern happens, then I will enter the trade. I'm looking for a specific set of movement within the candles to form a certain way. I don't like to use the word pattern too much because it kind of, you're kind of basically saying, well, I'll say it a different way. You're adding too much weight to the pattern. It's like, well, that pattern, when I see it, then that's what I'm going to take, and it's not about that for me. It's about taking a trade that makes perfect sense contextually. So when you see it form the pattern in parenthesis, the pattern, then it has to form in a way where I can look at it and say, yeah, there's only one direction that this can go, because it wouldn't have formed that way if it was going to reverse and go the other way. Do you understand? So I know it might sound like a bit, you might have to re-listen to what I've just said, but effectively all I'm saying is, if I see the order flow is a certain way and that leads to the pattern forming, then I'll take the trade. But the context has to be there, the order flow has to be there, otherwise I'm not interested. So that's a little nugget at the end of the session, or the end of the review. I'm going to shoot off, guys, because my throat's starting to get a little bit croaky. And I'll catch you in day 31, I think it will be now. So this is day 30, 30 days, 30 trading days. I've still managed to, down a little bit on the account from 150 to 133.26, but I'm happy with that, man. It's fine. I've lasted 30 days so far, so yippee dippy doo. Alright guys, so I'll catch you in the next review video. Take care, have a good trading week, and I'll see you soon.